Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen, chatting to Bill Rook from Redmayne Bentley. Bill, we've got three charts to look at today. They are the S&P 500, the energy sector, and platinum. Let's start with the S&P 500. It's the SPDR contract that you use, the ETF. What's this telling you?
What it's telling me is that, first of all, look at VIX. VIX is now cooling off a bit now, having risen again. We thought it was where the hoop is on the chart there. We thought that was almost the end and possibly a head and shoulders forming in there. But what's happened since is we've failed to hold the magic 90 level, and we've got to get back up to 90 or 900 on the S&P in order for this to resume its upward trend. And I think we might well get that. I think there's a lot of interest in the market, and a lot more interest, I think, recently. One or two rescues here and there, and a bit more fiscal stimulus. And I think the government's already going for it now. From the chart, the VIX is cooling off. Volume is inching up a bit more. And although we haven't got any other supporting trend indicators yet, it's very early days. We need to hit this 90 level in order to get normal service, really. It's encouraging the last few days of movement, but not until we get 90 do we start thinking, well, hang on, this might be something here.
I mean, just to play sort of devil's advocate here a bit, I mean, the fact that we're seeing percentage moves, daily percentage moves in the indices that you would expect normally over 6 months, and that we're seeing so much money being pumped in by a administration that is obviously desperate to save you could argue a sinking ship. Does that not provide a strong bear argument and is that not seen in the chart at all?
Well, that's going to come in one of the later charts. Are we going to see it in terms of, are we going to see commodities picking up in terms of the inflationary impact that may come about, rather than so fearful of deflation at the moment, that's continued pressure of commodities falling and a cycle of everything falling apart therein. In that way, we're actually looking at the other side of the coin, is an inflationary environment, which will be easier to handle, but I think we reflected in some of the other commodities picking up, and obviously we're going to see that in the platinum price.
All right, well, let's turn to the platinum price, which platinum was in a bull market for what seemed a long time, a year or so ago, and it hasn't been so good since then, has it?
Well, actually, the chart tells you everything here. I mean, there's a stop loss coming in March this year at around about 180 odd, and then there's a 60-day low, which you can see where that vertical line is. The first vertical line on the right-hand side, horizontal line, vertical line. That's where the arrow.
Which is it, Bill? Is it the horizontal line or the vertical line?
Vertical line. Sorry. Where the little arrow is there, that's when we went short on it, and that's actually coincided when the Ulster Index turning up, when the slope started going AWOL, and more importantly, when the share price started falling through the 200-day moving average, which is the red line on the chart. And the 50 is on its way down already. And that would have effectively doubled your money up to today's date. Now, why interesting today is because, although depicted on this chart, the 5 and the 20-day moving average have crossed. And this is the first time this has happened in some time. It's a very, very early buy signal. And, of course, we haven't even negotiated the 50-day moving average, which is the green line coming down, which we need, I suppose, to take on. But that is certainly on the cards if we get a bit more push here. And I think this is something, if we get an inflationary environment, or certainly we would expect to see commodities start picking up. And this is one of them that we might well see as hopefully as demand for precious metals against the problem that may be happening on the currency front, which we'd expect to see weakening currencies as more money is pumped into the system and lower growth rates.
What are your views on inflation versus deflation? I mean, we got a clue as to what they were then, but I can't work out whether we're going to have massive deflation because of falling asset prices and a lack of ability of people to spend, or massive inflation because there's so much money being pumped into the system.
Well, this is the problem exactly. I don't think we'll have deflation. I don't think it'll happen, but I think it's going to be waved around a bit, and the fear of deflation will actually lead us to an inflationary situation. Deflation would be a nightmare a political nightmare for the Western world to handle. I think so. I think at all costs that we'll avoid that and pump more money into the system to avoid that at all costs. Let's say.
Okay, let's move on to energy. That's the final chart that you want to look at today. Why have you picked this, and what are you doing with it? We're
looking for clues. This is the energy ETF tracking the US market, the US S&P, oil shares within that in that market. So this one here, the downtrend has been well intact for some time now. And is it turning or isn't it turning? And it's one of the clues as to whether there's any growth or any resumption of growth in the American market. We'll see whether this is picking up or not. And this certainly is what it's trying to. And this sort of thing is that it's a tiny movement at the bottom there, but it's made this movement before. It's not convincing yet that there's any change in the underlying trend. The blue line, which tracks the vertical line, the lines that channel the share price down, is the 20-day moving average. You can see why people prefer to use moving averages rather than or instead of these trend lines. But the 20-day moving average hasn't been tackled yet, so it's still very, very early days for this one. But it broke down in July. You can see that breakdown where the blue turns to red, and it's been going down ever since. But it may just have made a short-term bottom. We don't know yet.
As far as the sort of general trading environment goes, your clients, I would guess, are generally traders of equities. What are they doing at the moment? Are they looking elsewhere? Because it's been difficult to trade equities recently, hasn't it?
They're sitting still. I mean, either with, without, or whatever. Waiting to see, and this is the key really, is to say, well, can we hold the S&P level at 900? And if that is held, then we have every chance of back to formation of a formal bottom. It's very, very difficult, sort of trying to forecast where lows are, where bottoms are in markets. And it's the thing that media and speculators try and pick, and it's very, very difficult to actually engineer any one formula which tells you this is it or this isn't it. So I'd say we're waiting for 5 and 20-day moving average to cross over on these and follow them accordingly. And it would have worked so far. I mean, you'd have been in and out. Depending on the product you choose, it would have been okay probably. And you have to be very, very nimble, as I said before we off-air, Charles. It's a very, very dangerous market. Somewhere on Friday, how we dipped and then had an enormous rally later on Monday. I mean, that's almost unforeseeable how that came about. And this is one of the trades of this market. It's skittish and it's sort of unreliable in that sort of way, and certainly downward trending. And this is why it's very, very important to sort of find some sort of a resistance level to break and actually have meaningful support thereafter. So 900 to break and hold, and possibly we're on our way to the next level.
How does it compare with markets that you've seen in the past?
Worst ever. This is non-stop drip. I mean, this is sort of, and the worst that it was that possibly it could have been thought of after the initial banks, Northern Rock went down and everything. The market was surviving. It was doing quite well. And the H-Boss sorted it out, and then I think Lehman's turned everything upside down. That's when the market really went. And it's the financial. The backbone of the problem with the market has been the financial sector. If it hadn't been that, then I don't think this would have been so bad. If it's going to be put back together in a sort of a reasonable way with new rules and whatever, then I think sort of there's every chance of things picking up. It's a case of confidence coming in therein and building an exercise of belief that everything's going to be okay.
Well, Bill, on that note, we'll leave it for another week. Thanks very much for picking those charts for us. We'll keep an eye on those, and we'll talk again next week.
Thanks, Charles.
Chart of the Week with Redmayne Bentley.